Welcome to the Capital News. I'm your host, Alex Koritis. Today is April 30th, 2019. Thank you so much for joining me. I hope everyone's doing well out there. So what took place in the markets today? Well, the S&P closed at another record high, closing up nearly 3 points. That's all it took, was just another 3 points to set a record close for the S&P 500. Meanwhile, the Dow was able to climb higher and gain 38.5 points for the day. The NASDAQ, however, suffered a loss and was down 66.5 points for the day. Meanwhile, the Russell 2000, the small cap index, closed lower by about 7 points. Now, a lot of the market noise with the NASDAQ had to deal with the follow-up with the earnings report that came out from Google, and we had that discussion yesterday. While they may have beaten on the bottom line, they did not beat estimates on the top line, and it left a lot of investors wondering, well, what's the rest of the story? Is it problems with YouTube? Is there a lack of monetization, making more money with advertisers? Is competition creeping in? What's going on? So there was still a lack of information on the part of Google or its parent company, Alphabet. And so you saw the continuation of after-hours trading trickle through to the remainder of the NASDAQ, and that's why we closed down. Although NASDAQ was down quite a bit more than what it ended up closing down, which was the same case for the Dow and the S&P. I mean, the Dow was down about 100 points at one point during the day, but if you look at a chart, it was another V-shaped recovery intraday. So it's hard to keep these markets down. Everything just wants to keep going up, up, and up. Oil, WTI, sits at $63.23. Meanwhile, the Brent oil now sits at $71.76. Gold, $1,282 an ounce. Silver is still below $15, sitting at $14.93. Meanwhile, the 10-year Treasury decreased about 1 full percentage point, and now we sit at 2.509%. So we're getting close again, folks, to being at a 2.4s. I don't know what's going on here. What's going on? Is there a lot of buying? Is there a lot of hesitation? Again, we are still in the midst here of the Federal Reserve meeting this week. We're going to have a report out from them tomorrow, the press conference on Wednesday, telling us what they thought about what's going to happen. What are they going to do? Got to sit around there with the eggheads, 12 of them sitting around a big table. What's going to happen? What are we going to do? How are we going to communicate the next mess up? And we're going to get into that today because President Trump was out there in all his glory, striking at the Federal Reserve once again. So that's going to be the bulk of our discussion here today. And then VIX, the volatility index, only gained a penny. It was up 1 penny today and now sits at $13.12. So what's going on here, folks? Before we get to the president, let's have a brief discussion here with, let's continue with earnings for right now. Apple reported after the bell today, and they beat estimates. They beat bottom line, they beat top line estimates. Everything's fine. I mean, now, this isn't the first quarter for Apple. They run on a different calendar. This is actually their second quarter earnings, but nevertheless, they are up 5% in after-hours trading, and they're now at about $210, $211 per share after-hours trading. We just had this conversation. I just put that refresher in your guys' memory, I hope, yesterday about how Apple came out in the fourth quarter of 2018 in the midst of everything going down, saying, I think the first quarter of 2019, which is right now, which is what we're in, is not going to look very good for us. That's what they said. So all of the analysts come out and they drop their expectations, they lower their earnings calls, they do all this stuff, right? And then what happens? Well, boom, 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 boom. Here comes Apple. Oh, yeah, we beat. Everything's fine. I don't know what we were talking about. Just lower your expectations, make it a low hurdle for us to jump over, and then we'll come out and we'll say everything's fine. And there you have it. And the stock's trading up 5%, and it's almost at $1 trillion market cap. And we had that conversation just the other day, too, about companies having their market caps almost hit, or exceed $1 trillion. Well, here we are. If this run-up in Apple continues tomorrow, it'll top $1 trillion. No question about it. Meanwhile, Microsoft did. Microsoft has hit the $1 trillion mark today and closed at $1 trillion. Now, it's hard to fathom these numbers. It really is. For anybody. This is $1 trillion is a 1 with 12 zeros. It is 1 million millions. It's a huge number. I think what gets lost in all of the discussion about $1 trillion, because it gets thrown around so loosely anymore. Remember, and that word started to get thrown around loosely really in the 08-09 financial crisis, because we needed to do the $700 billion in TARP. Then you had quantitative easing, and that just started to become, well, it's just $1 trillion. And then there was $1 trillion deficits, and everything was fine. Let's just spend trillions of dollars here. We don't have it, but that's okay. Just spend it. Let's borrow it. Let's print it out of nothing, out of thin air. Let's just add it to a computer screen, and we'll say it exists. Not going to be any problems. This is lunacy. This is insanity. The chickens are going to come home to roost. The piper once paid, and he will get paid. When? If I had a crystal ball again, I would tell you guys. I would position yourself. I would tell you how to get positioned. I would position myself the same way. I don't have a crystal ball. So the only thing that you can do in the meantime is have a plan, stick to it, build some cash, stay long some of this market, because, it is. We're in the financial road of Oz. The behavior of it, the momentum of it, is still people wanting to drive this thing up. There is still cash sitting on the sidelines. There's still cash in bonds that could come out of bonds and go into equities if people are really looking for a higher yield, if that's what they're chasing. So, this market can continue to climb. We have these discussions all the time here. That's what the president wants. He's out there tweeting. We're going to get to that in a moment. But just for a little perspective on what $1 trillion is, because this gets lost in the media. Now, they want to applaud $1 trillion market caps, but what are you really saying? Is that sustainable? Because they never have that question. They never have that debate. At least I've never heard it. If they have, please tell me where it is. I'll go find it on YouTube or whatever. Please tell me if that's the case. But I've never heard them argue, well, are these valuations, is that sustainable, $1 trillion? They just want to applaud it. That's fantastic, $1 trillion. The United States economy is about 19 to 20 trillion. All right, a little perspective here. China is 12 trillion. Japan, 4.8 trillion. Germany, 3.6. The United Kingdom, 2.6. Let's go down to our friendly neighbors to the north. Canada, $1.6 trillion. South Korea, 1.5. Australia, 1.3. These companies are as big as countries. Do you think that is sustainable? Maybe you do, and you can have that belief. Maybe you're right. Maybe it'll be $2 trillion by next week. It could happen. This is the world in which we live. I do not think that trillion-dollar companies' market caps is sustainable. I just don't. Look at the graph. Look at Microsoft. It was trading at $16 during the 08-09 crisis. $16. Now it's at $130, and it has $1 trillion market cap. It's hard to remember what happened 10 years ago. It's hard to remember some of the conversations we have on this podcast just a couple of days ago with all of the information that comes out there, just living your daily lives. That's why it's so important to look back, take a deep breath. Do not get caught up in all of the hysteria and the mania out there, because everybody's trying to sell something. You're watching the mainstream media, you're watching the financial mainstream media. Everybody's trying to sell you something. Oh, yeah, everything's fine. Just buy. Take a deep breath. Have a plan. Stick to it. Build some cash. Stay diversified. And pay attention. Go do your own research. Go do your own homework. It doesn't take that long to get on, Yahoo Finance or Google something if you're interested in looking at. TradingEconomics.com is a great website for quick headlines and a whole bunch of data if you want to get, down and dirty a little bit. That's all you got to look at for some basic headline news and some stuff to provide some perspective, which is missing in a lot of the discussions and debates that take place throughout the media. $1 trillion. Canada is 1.6 trillion. South Korea 1.5, Australia 1.3 trillion. Do you think this is sustainable? I don't. I really don't. I think it's going to be halved easily. I just don't understand how this can happen. Well, I do understand how it can happen because you have all this money printing and it has to go somewhere. This is why this is unsustainable, because this isn't true organic growth. This is financial engineering. This is money printing. It is unsustainable. And if it continues, well, then again, my question then goes to one that's a little bit more ideological, and it says, well, why do we want to exist in this system? why do we want to allow money printers, the Federal Reserve, and other central banks around the world just to counterfeit currency at will to benefit major corporations? So that's a nice segue for right now to go into President Trump and his tweets today, which is no coincidence that this took place today because the Fed is meeting. They met today, they're going to meet tomorrow, and then they'll come out with their press conference giving us the news. What are they going to do? Well, here's President Trump earlier today. China is adding great stimulus to its economy, while at the same time keeping interest rates low. Our Federal Reserve has incessantly lifted interest rates even though inflation is very low and instituted a very big dose of quantitative tightening. We have the potential to go up like a rocket if we did some lowering of rates, like 1 point, and some quantitative easing. Yes, we are doing very well at 3.2% GDP, but with our wonderfully low inflation, we could be setting major records and, at the same time, make our national debt start to look small! Exclamation point. What are you smoking, Mr. President? Who in your council is telling you to do this? The only thing that I can think of that would be rational for the president to come out and say what he said here in this tweet is because he is attempting or is in the midst of playing the Federal Reserve. We've had the conversation here on this podcast many, many times about how the president, erroneously and foolishly, in my opinion, has taken ownership of the economy and the stock market. Didn't have to do it. He could have went on a huge educational spree, if you will. He could have educated his base and a lot of people in this country about the Federal Reserve, about a whole host of issues going on in Washington, D.C., and it truly could have been a draining of the swamp moment. Now, of course, that didn't happen. The president has an ego. He likes to exaggerate. He likes to take credit for things that are good, or at least appearing good, and making new records. So he's taken ownership of the economy and the stock market. He blamed the Obama administration. He blamed the Federal Reserve. Now, he's happy with the economy. Everything's great. All the numbers are fine. But he wants to go after the Federal Reserve in a different direction because when he was candidate Trump, and even civilian Trump, he was out there tweeting how quantitative easing made people like himself richer at the expense of middle America, which is very, very true. We state that here all the time. We've quoted other investment legends like Stanley Druckenmiller, major hedge fund manager, reformer, coming out and saying this is the largest wealth transfer in the history of the world, which we agree with that statement. So, now to have the president come out and say everything is great economically, but we need to enact emergency measures, we need to cut interest rates. That's not necessarily an emergency measure, but it is a measure that is taken when the economy is weakening. Quantitative easing, however, is an emergency measure. It's a fraud. It's a flawed measure, but it's nevertheless a policy that has been enacted. And it is looking more and more like that might be what ends up happening. So, now the other interesting point in this tweet, I don't know if you caught it, he said here, if we did some lowering of rates, like 1 point, and some quantitative easing, like 1 point. Remember, folks, we were having the conversation when you had Stephen Moore and Larry Kudlow coming out, and the president himself saying, we need the Federal Reserve to cut interest rates by 50 basis points. 50 basis points. Now he wants a whole point. So are things really that bad, Mr. President? You can't have it both ways. You can't say we're doing very well with 3.2% GDP, low unemployment, yada, yada, yada. You hear the names, you hear the lists, and then say that the Federal Reserve needs to cut interest rates and do quantitative easing. It's one thing to do one or the other, but to do both. Well, what are you saying? Are we in the toilet? Is that where we're headed? Or is the president trying to dance himself out of the box he's put himself into when he's taken ownership of this economy and the stock market? That's what I think is honestly taking place here. I don't think the president believes this, that this is the right policy. I don't. I'm also hoping, and just for full disclosure, I'm hoping I am hoping this is the case, that he doesn't believe that. If he does actually believe that the lowering of interest rates and another round of quantitative easing has to take place, I'm done with him. I mean, that's one of the biggest frauds ever placed on the people of the world, let alone the United States of America. This has been a central banker's dream, I guess you could say, for the past decade, to just continuously print money, lower interest rates, and that's what we're seeing. So I am hoping that the president is playing the Federal Reserve and actually doesn't believe this. If he actually does believe this, he's not going to get my vote. Now, the Democrats aren't going to get my vote either, but I'm just going to stay home because I can't stand for this. If he's supposed to be draining the swamp, if they actually listen to him, the Federal Reserve, if they actually listen to him and they lower interest rates and embark on quantitative easing number 4, that's it. I mean, what's going to happen? Will there be a short-term boost to the stock market? Quite possibly, but then if everybody sort of digests the news and says, well, wait a minute, we were just told everything's great. We have 3.2% GDP, where earnings are beating. I mean, everything is just fine. Unemployment's low. Manufacturing's coming back. We're trying to negotiate some trade deals. Why are they doing this? Is something wrong? And that could be the catalyst that puts it down. Now, you can also have, again, Trump playing the Federal Reserve and trying to box them in. Because if they were thinking about lowering interest rates during this meeting here, which we're going to find out tomorrow, or if they were thinking about quantitative easing number 4, did he just box them in to not make that decision? Because the Federal Reserve is all about the independence. They're an independent agency. We don't listen to politics. We don't listen to politicians. We don't listen or take orders from the President of the United States. In fact, it's very important that we don't take orders from politicians and the President of the United States. It's our independence. So if they do this, if they cut rates, 25 basis points, 50 basis points, a whole 1 point, what's going to come into question? Their independence. So now they say, oh, are they just doing the bidding of President Trump? It's an election year. Well, it's in the midst of a presidential election. It's not an election year. We still got another year and a half to go. But nevertheless, it is an election cycle, let's put it that way. And I mean, presidents who don't do so well with the economy or the stock market tend to get kicked out of office. So are they just doing the president's bidding so he can get reelected? Well, that doesn't seem like draining the swamp. That is exactly what the swamp is all about. So this brings up a lot of questions. The other thing that's concerning to me, which I don't like, is during the State of the Union address, the president came out and said this country will never be a socialist nation. Fantastic. Too late, but fantastic that you said it. Now he wants to call out the communist Chinese and congratulate them on their great stimulus program. Again, folks, if you're strong and you can run a marathon, you don't need crutches. In fact, if you're running a marathon and you're carrying crutches, it becomes a hindrance. So, I mean, everybody is trying to prop up their economies the world over. Why do we need to take part in this? We don't. We don't. But we have, a president who has foolishly taken ownership of the economy and the stock market, and he doesn't want it to go down. But if it does go down, he's starting to set it up. He's been doing this for quite a while. And again, it's not just the Federal Reserve. It's also the Democrats in their investigations, which they are continuing. So it's going to be interesting to see what happens, because if this market does go down, because you have these market cap valuations, again, $1 trillion market caps on some of these companies, how sustainable is it? How much more good news is waiting in the wings? I would argue not too much. Is there going to be a U.S.-China trade deal? I mean, my God, your guess is as good as the next person's. We were told it was going to be a signing ceremony at the end of March. It's the end of April. Where's the signing ceremony? We were told by the Treasury Secretary, well, we're in the final laps. I have no idea what that means, because we were told there was going to be a signing ceremony last month. The final laps. How big's the pool? Are they swimming across the Pacific? I mean, that could take a while. So final laps means absolutely nothing to me, but let's just assume for the sake of argument that there is a conclusion to the U.S.-China trade war talks, okay? What's going to happen? How much of that has already been priced in? Are you going to get a nice little run-up? In a short term, probably. But then you're going to have the markets go in, look at the deal, digest everything, and it's probably not going to be that great. If it was going to be that great, it probably would have been done by now. But I think what's going to happen is each side is looking to save face, because I don't think that the United States is going to make an historic deal. Again, I think this is more about slowing down the growth of China than it really, and really getting a hold on the IP theft and the technology transfers and all that stuff, as opposed to just saying, well, it's expensive, it's cheap stuff here, it's expensive stuff there, we need to put tariffs on because everything's fantastic with that. That's noise. The actual tariffs, the actual trade war, that's noise, that's the distraction. I think there's a bigger game being played where the U.S. is trying to slow down the quote-unquote economic machine of China. Again, they're falsifying their numbers. If everything was fantastic over there, why are they doing extreme measures to stimulate their economy? Because it isn't strong, ladies and gentlemen. And when you have a president now calling for lower interest rates and quantitative easing number 4 here, something's amiss. So it's going to be very interesting to see what the Federal Reserve does. I think what is likely to happen is they are going to remain in wait-and-see mode. And then it's going to be interesting to pay attention to see what happens to the markets between now and the Federal Reserve's next meeting. Because should the markets turn and roll over and go back down significantly, well, that fits the president's narrative to a T, doesn't it? He said, well, look, I told you to cut interest rates. I told you to embark on quantitative easing number 4. You didn't listen to me. Look, everybody, the Federal Reserve's screwing us. He could have done this in a much better way that didn't have to create volatility and uncertainty and really create the financial world of Oz in which we live. I mean, he really could have taken this thing by the horns. He could have educated the people of this country, which is in dire needs of a leader to educate them on the Federal Reserve and what has been taking place for a very long time. But no. We have to play these games. We have to have these Twitter battles. We have to have everybody being called out. We can't just have a national discussion on anything. It has to be a social media frenzy. It has to be a game. It has to be a facade. It upsets me like you can't imagine, because this hurts a lot of people. This hurts the middle class very, very much. Where are the Democrats on this? Aren't they supposed to be the party of the people? Where do you hear any of them attacking the Federal Reserve? They're not there. Again, you might get it from Pocahontas or Crazy Bernie every once in a while, but that's it. And their solutions are terrible. But at least they might call them out or call out the banking sector. But here you have it. The president, again, is attacking the Federal Reserve. I am hoping, again, this is important, I have to stress this, I am hoping the president and his team don't believe this, because he's not the only one out there saying this. Again, Larry Kudlow's out there saying that the Federal Reserve should cut interest rates. This is a unified message. So I don't know if somebody's doing drugs or they're just trying to play a game and get themselves out of the box that they have put themselves in so they can lay the blame, should the market and economy roll over, that they can blame the Federal Reserve. Because they can say, look, I told you to cut the interest rates. I told you to embark on quantitative easing number 4. You didn't do it, and now the markets are going down, the economy's softening, and there's no end in sight. So I think that's what's going to happen. Stay tuned. Pay attention to what the Federal Reserve says tomorrow. I'm, of course, going to be all over it. It's getting very interesting. I just wish that it didn't have to affect as many people as it does negatively, because if you lower interest rates and you go on quantitative easing number 4, you're going to weaken the dollar. People who are trying to save money in a savings account are going to earn absolutely nothing once again. They're not earning much now, but at least they're getting a little bit of something after 8 years of nothing. Now it's going to go back to nothing. And if you got a weaker dollar, what's going to happen to the price of oil? There you go, folks. It's going to go up. So how's that going to help the middle class? It's not. So I'm, again, hoping beyond hope that the president is just saying this for political reasons and trying to box the Federal Reserve in. But time will tell. Thank you so much for joining me today. Please like, share, subscribe, get the word out, leave your comments. We would love to hear from you. This is the Capital News. I am Alex Koritis. Godspeed.